Let's quickly kick off with your views on the CBK announcement yesterday, of course, keeping the key lending rate on hold at 18%. Do you think that this was a prudent stance by the CBK?
Thank you for having me on the show. Yesterday, we actually expected a 1% rate cut by the CBK, though it actually kept the benchmark rate flat. I think the overall sentiment, at least on the ground, has been that CBK has been a bit more prudent than expected in light of the crisis that's going on in Syria and Iraq and Iran, which would have an impact on oil prices. And given that we're a net importer of fuel, that would actually probably mean a minimal spike on inflation rates going forward. So perhaps what the CBK did was in light of these future events that are yet to unfold.
As you say, that oil price is one that everyone is watching closely right now, and a big concern how that's going to start playing out in economic growth figures coming through. Let's just get your view, though, on how the equity markets in East Africa have performed so far. Of course, we've seen Kenya's market continue to rally. Rwanda's market doesn't have an index there to track its performance, but of course it's got two indigenous stocks that you look at as a proxy for the performance of the market. What type of activity and what is your analysis of the increased activity that we've seen on the markets so far?
I'll take Kenya first as out of all these markets. What we've seen is increased investor appetite for the Kenyan market. This has definitely been pushed up by the strong earnings that have been coming through from the banks and the non-financial sectors. Counters such as BAT, Kenol Kobil, KCB, very strong numbers coming through there. But also, more importantly, I'd like to maybe pull your attention to the fiscal, the GDP outlook for this country, as well as the government strategy on borrowing. The government is actually now focusing on borrowing more from the external financial sectors as opposed to the local markets, which has actually meant a pullback on the trading of bonds, especially on the secondary markets. So in essence, we're seeing now most of the local fund managers switching from a fixed income strategy more to an equities strategy, which has actually supported the run-up up until yesterday in terms of the equities. And not alone, the local fund managers are not alone. We also have the external, the foreign fund managers who've also been buying into the strong earnings and the discounted valuations as we stand today. Then looking on to Rwanda, you're correct in stating that there are no indices there, but we look at the performance of Bank of Kigali and Rwalira over the last month or so. This counters have been very flat, though what has been interesting is Bank of Kigali announced its full year financials. It gave brief snippets into what to expect when they actually make the full announcement later in this month. The interesting thing with Bank of Kigali is that the management has changed its strategy. It's actually paying out a dividend, and today that dividend of 6.2 Rwandese francs yields a 5% dividend yield on the stock, which should actually be an uptick for the counter as we speak.
What about the threat of Equity Bank as it formally launches its expansion and into Rwanda? It's it plans to open 7 branches now, and in the short term 3 more. What type of threat does that pose for the likes of the Bank of Kigali?
I think for equity, it's a strong thing for them getting into a new market that's highly underpenetrated. But Bank of Kigali is actually a very strong player and focusing on corporate banking. But what you need to remember is last year when they were doing the IPO, they were raising funds to enhance its distribution network and to slowly start getting into the retail market by using its brand name, which is already locally known, and using its management expertise and knowledge of the Rwandan market to tap into this retail banking space. So yes, Equity Bank is a threat, but Bank of Kigali has actually been proactive to anticipating this threat and has actually been changing its operations in anticipation of this.
Let's glance back to the banking sector in Kenya right now. Of course, the banking sector posting a strong performance so far. That's after we've seen really strong results out of the likes of KCB coming through. Co-op Bank is still to release its results. That on Thursday. We're also waiting for results from Equity Bank. But overall, what is your view on the fact that the banking sector results have been beating expectations so far?
This was actually expected by us. We knew that 2011 would be a very strong year for the banks. For KCB, they also had recoveries that they wrote back, which was a strong push-up in terms of their total revenue for the year. Cooperative Bank announcing tomorrow. Equity Bank is yet to announce a date for announcing, but we still expect double-digit, very strong growth along the lines that KCB did. The only concern would be for this year, especially in light of decreased asset quality, and also the fact that most of the banks have pulled back in terms of giving out loans. As mentioned in an earlier show, we released a note on the banking sector in early February, and we think that the entire industry will do an asset growth of about 10%. So that in essence, the revenue that will be coming in from the banks this year will be more of transactional-based income as opposed to core income from the lending facilities that the banks have been traditionally dependent on.
Mbite, let's shift focus slightly and glance over Zimbabwe's market right now, because of course there are a lot of concerns as to how the reforms are going to play out, whether the change in constitution is going to have any impact, and of course how the economy is doing right now. We've seen a lot of stronger than expected growth numbers coming through from the economy, and of course the bourse posting a strong performance last month. But is this an indication really of any fundamental change in the economic growth picture from your analysis and your views right now at Renaissance Capital?
I think Zimbabwe, the key concerns still hold. The whole concern surrounding the new constitution, surrounding the economic and diplomatic, democratic outlook. What's important, in as much as Zimbabwe reported very strong numbers, this year we're a bit hesitant in regards to the growth year-on-year rate. We think the fact that there's increased tightening liquidity and a dearth on fixed income investments in this economy will not be able to deliver strong economic growth similar to what we saw last year. That said, we're looking at INSCO, which will be reporting tomorrow. We are still expecting very strong numbers out of this corporates that are listed out of Zimbabwe, but we are cautiously looking out to see how the economy pans out in light of these limitations over the year.